Are you panicking with your portfolio? Are you sick of looking at it? It keeps going down. Well, that, in my opinion, is about to change. With $1.6 billion wiped off the face of the crypto market, it's about to get good. Now, you may think I'm crazy, and many people are telling you the complete opposite, but stick around in this video because I have some alpha you guys need to be aware of, whether it's Fed decisions or whether it's a very interesting chart that you simply cannot avoid to miss. Super bullish in this video. As always, smash the like button to a brand new all-time high. And don't forget, if you enjoy this type of content and staying ahead of the markets, hit that subscribe button. Every day we're putting out content so that you know what is going on. Now, with that being said, let's get into it. So you, like I, will have been looking at your portfolio and asking yourself the question, should I be selling? Should I have got out? I've been watching people on crypto Twitter and they're telling me the market's over, but you're still holding your bag. There's a bit inside you that says the market isn't finished yet, and we're going to break down why that is. We saw Bitcoin plunge below 109,000 with another massive liquidation event, and everyone seemingly panicking about what's going on. It was very specific though, coming out of Asia, particularly mainland China, as well as Bangladesh and India, for the last 3 days have significantly dumped markets. But then on the back of that, we saw the US and Europe dump as well. So what is really going on, and why are we seeing such a big narrative? Well, the reality is there isn't anything crazy. Yeah, we've seen a little bit in terms of Russian jets flying over the US. I believe it was Alaska. Then we've also seen, well, just lack of ETF movement and lack of institutional buying, all of which may be about to change. If you've been a regular of this channel, you will know exactly what I'm talking about. But that is it. So you kind of then go, well, why is the market just not performing as we expect? And all I think is now starting to play out. We got a pretty big announcement coming out of Blackrock. Eric Balchunas dropping the alpha, saying Blackrock registered the name iShares Bitcoin Premium ETF. Coming soon, and this is a covered call Bitcoin strategy in order to give BTC some yield. Pretty interesting. This will be an accumulator of BTC and obviously giving back to people that get involved in it. This wasn't all. There was actually a second Bitcoin premium ETF as well registered by Blackrock. So although we've seen a relatively slow down in the interest of current ETFs, it's all about to get ramped up. Again, we saw a Hyperliquid ETF launch. Again, an Ethereum staking ETF from Rex Osprey as well launched. So as I talked about last week, I think the ETF market is about to explode. Remember, they recently changed all of the ways to do it, allowing fast track of ETFs to go through. This could be very bullish indeed. Remember, BlackRock with its 12.5 trillion Bitcoin premium income ETF, well, it's going to hold a bit of weight in the market, and certainly, in my opinion, will be buying a bit of Bitcoin as well. The fact of the matter is, though, that this will be generating strategies such as covered call options, and it's going to aim to provide investors with yields while still benefiting the Bitcoin's price potential. It's about as good as you could possibly get from an ETF, and they all came in as market closed as well. Pretty interesting. And if you look at this chart, gold versus Bitcoin, something we've been talking about for a while, Bitcoin generally moves about a 200-day lag in terms of gold. Well, what did we see recently? Gold spiking, initial tariff announcements, again, Trump winning the election, all were a driver of gold, and risk off. People seem to be going into gold. We know banks have been doing exactly the same. Bitcoin is about to move, and I think this, along with everything else we're talking about, should see a significant asset. Remember, people are going to look to other assets. How do you do that? Well, you can get a premium ETF where you get yield benefits if you were to choose the BlackRock ETF. That's why this is such a big deal. And again, you're going to see way more of these start to come to the party. And also on the back of that, the Federal Reserve and US debt. Now, the ISM, which is the manufacturing data, we've talked about this on my live stream as it's a very good indicator as what's going on in the US. Now, remember, they revised GDP from 3.3 to 3.8%, showing their economy is booming. But how likely is it to send the Bitcoin market into 2026? Well, Raoul Pal had a pretty interesting statement, especially when it comes to the ISM and how the move to 2026 could play out as a massive market cycle top for Bitcoin. Listen to this.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow. in our Everything Code presentation, but basically it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. The 5.4-year sine curve, 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
So refinancing debt has never been more important, and that's why there's such an emphasis and why Trump's been pushing the Fed to get those rates lower. The fact of the matter here is lower rates ultimately mean less debt to pay, and the quicker, therefore, it gets paid off. We already know Christopher Waller, as many others, and Stephen Mirren that have gone over there are arguing for 50 basis points, maybe even 100 basis points by the end of the year, all to support the reducing of that debt. Why? Because then money can flow into the economy, money will flow into things like stocks and everything else. And if you're a cryptocurrency holder, it will eventually make its way into the cryptocurrency market. This is why the thought of a 2026 market cycle top has got everyone pretty excited. But we also know that Trump's involvement in the Fed doesn't help. And in fact, whenever he talks about maybe sacking someone or the Fed should cut rates, it doesn't help in the markets. The former now Fed chairman has just issued a joint statement with all the current members of the Fed, basically saying that they stand with each other and that the Fed must be kept private and, more importantly, should be kept separate to the US government. This is going to be pretty interesting. How Trump responds, we'll wait and see. But the fact of the matter is they are all talking about keeping it as it always has been. They've got to make the decision based on monetary policy as opposed to a president's wish. Whether that'll see, I don't know. Stephen Mirren is definitely going to be the interesting one in this party if he gets what he wants to get. So when we take a look at where the market is, and a lot of people will definitely be freaking out, over $2.2 billion worth of short-term holders realized loss in terms of their trades actually selling too soon. Well, maybe this is just one of those moments we need to see how the market plays out. 2026 could end up being the biggest bull market top ever. And looking at what's going on in the markets, this could just be another flush out before an absolute skyrocket in ETFs over the course of the next week. Watch out. I think they're coming. It's going to be pretty bullish. So let me know what you think in the comments down below. I want to know what you think the Fed should cut next. Let's talk about that. And don't forget, hit the subscribe button and smash up that like to an all-time high. And if you want all the latest alpha calls as well as our trade setups for the day, grab a channel membership. That gives you access to our premium Discord as well. So hopefully see you in there. Take care now. Bye-bye.